we are very aligned with our investors, in particular Starboard, on wanting to drive shareholder value and stock price performance. We are very aligned on that. Last year, we actually entered into a settlement with Starboard where we added 3 new board members to the board, 2 of which they approved, and one even became the chair of the board. So we're very happy about the board's contribution, including their approved directors onto the board. So overall, we feel very unified as a board in terms of our path forward, and we want to listen to all shareholders around ways that we can be driving further performance and shareholder returns. We're very aligned that the strategy is to really drive greater growth and profitability. And I think when you look at our share price returns as a result of that strategy being executed, I think it's pretty clear, that strategy is working at this point. I think it would be hard to knock the credibility of KKR and their views of long-term, profitable shareholder returns. So KKR led an investment in the company. We're very confident that they are long-term believers in the business and the current plan that we have. They have a very strong track record driving significant shareholder returns for their investors. So we believe having a 9-figure investor around the board table that is supporting the business and our path forward to drive growth and profitability, we think that's a great thing for investors. And when you look at Q1 performance and you look at what we just guided to, we think it's very obvious the execution that we have and the leadership position we're creating in the market with our content cloud strategy. As a public company, we obviously always have to consider the best path forward for shareholders, and that's something that we're always considering. We did a pretty broad strategic review of the business in Q1, and we're very excited about the path that we're on right now. What I will say is that we're going after one of the largest markets in enterprise technology. It's a $55 billion category for enterprise content management, collaboration, storage, and data security. And when you look at what we are delivering, nearly we just got into over $850 million in revenue for this year. We are, I think, in a very strong position to capture a significant portion of that spend as it moves to the cloud. So we think there's massive upside in the stock, in the business going forward. I think it'd be impossible to point to an enterprise software category that was interesting and large that didn't have Microsoft or other large incumbents that are competing in those spaces. If you take the big data space as an example, you have all of the major infrastructure and cloud providers, and then you still have companies like Snowflake, Datadog, Splunk, Elastic, Databricks, and many others that are driving meaningful growth at scale. So when we look at the similar comparison in the content market, we think there's a significant opportunity for there to be multiple players serving enterprises in different ways. We're going to be differentiated on the basis of data security, workflow, collaboration, and an open platform that integrates with all of our customers' software. That's our vision for the content cloud, and we are very confident that you can generate very meaningful, significant at-scale growth going forward as a pure play, best-of-breed provider in this space.